Hi, I'm Bob, the Mortgage Coach Mitchell. Thanks for stopping by and watching the video. Today we're going to finish up on our 5-part series on not how to buy a house, but if you should buy a house. So in previous videos, we addressed the issues that you should consider when thinking about buying a home. Things like income qualifying, the different various loan programs that that might be available to you, and what kind of cost you could expect incur, and when you do decide to go ahead and buy a house. Anyway, today we're going to talk about where you might be able to come up with some help in getting the funds needed to buy the house. So let's make you a homeowner. Okay, so anyway, now the first place that you should look for money when you go to buy a house is in the mirror. Okay, well, you got family and friends and co-workers and all that sort of thing. You should have been able to, or will be able to, at least save part of the money that you're going to need. The ability to save is actually a very important consideration when you're thinking about buying a house, because even if we can structure your transaction in such a way that you're not going to have a down payment and the seller is granting you a seller concession to pay for your closing cost and prepaid, you're still going to need what I call wiggle room money. That is, as we talked about in one of the previous videos in the series, you're going to have to be able to come up with at least enough money to fund your earnest money deposit, any due diligence that might be required by the contract, as well as you're going to have to be able to pay for your credit report and the appraisal. So now some of those. One other thing is that your building inspection. That's very important. Now you don't have to have one; it's not contractually obligated, but it's actually a really good idea. But anyway, another reason that you're going to need to be able to save is that all homes are in the process of falling down. That is, that part of the house that you're looking at right now might be in great condition. But how about in a few years? Say, for example, the house that you want to buy that has a roof that's 10 years old. It might be perfectly serviceable, but how about in 5 years from now, or maybe 10 years from now? When that roof needs to be replaced, it's going to be on you to fund the replacement. Okay. The same thing goes for all the other components to make up the house. Carpets don't last forever. Paint gets dingy. Air conditioners get old and less efficient. They sometimes just simply quit working. So one of my suggestions to new homeowners is to set up a special savings account for home repairs and to have a set amount pulled out of your paycheck and direct deposited into that specific home repair account, so that when the roof does need to be replaced, you're in a better position to pay for it. Does that make sense? All right, so things break and it's going to be on you to pay for them, so you need to be able to save. So how about now? Can I get help coming up with the money to buy the house now? Well, we're not going to worry about that stuff further on down the road. We're just going to try to get into the house at the moment. The answer is yes. There are several places that you can look to try and find money that you're going to need to complete the purchase. Okay. Ironically, one of these places is the seller. Most loan programs allow for the seller to pay for a certain percentage of the purchase price to pay for the buyer's closing cost and prepaids. For example, Fannie Mae allows for the seller or other interested parties, such as the real estate broker or the builder, to contribute up to 9% of the purchase price towards the buyer's closing cost and prepaids. That's on loans where the loan to value is 75% or less. On loans where the LTV is greater than 90%, the seller concession is limited to 3%, which in most areas is still sufficient to pay at least a good portion of your closing cost. FHA allows for the seller to pay up to 6% of the purchase price, while they still only require a 3.5% down payment. So that might be one of the reasons why you might choose to go FHA over conventional, but that's kind of getting off on a different topic. Now, sometimes the seller isn't willing or able to contribute, and you'll need to find another source of money. So where else can you look? Another place is your friends and family who can gift you the money in order to help you buy a house. Gift money can be used subject to minimum borrower contributions, because you do have to put a certain amount of money into most of these deals. But the donor needs to basically be a relative or someone who has a documented, established relationship, like a domestic partner, a former relative, a godparents, or in some very, very specific circumstances, a very good documented friend. Gifts can be complicated, but the biggest thing to remember is that when you're getting a gift to help you buy a home is that it has to be a gift. The donor is going to have to sign a piece of paper stating that it is a gift and that no repayment is expected. You can't borrow the money from mom, okay? Another place where you might be able to find some help is from your employer. While not many employers do this sort of thing, it's not against the rules for the seller to provide a grant your employer to provide a grant, a direct or a fully repayable or even a forgivable loan to help you buy. While it's not common, it's worth at least looking into to see if they might help you out. Another source of funds can be donation from entities such as your church, a political subdivision like the city, county, or state, a nonprofit entity, or a fraternal organization, or even a housing finance agency. Some of the hoops that you might have to jump through on these might make it more trouble than it's worth, but like contributions from employers, it's worth looking into. Another place where you might be able to find help is from your lender. It's kind of odd, they're charging you money, but they might be able to actually work some money into the deal. While most lenders are there for a profit, and there's no such thing as a free lunch, subject to income qualification and minimum contribution rules, you can build some or all of your closing costs into your rate. For example, just as you can buy your rate down by paying discount points, you can also pay a higher rate and have the lender pay some of your closing costs or prepaids from the additional money that they earn by selling the mortgage at a higher interest rate. That is, you can think of buying the rate up or down as a bribe. The bigger the bribe, the better the rate. The better the rate, the bigger the bribe. So lender-funded down payment assistance programs usually work this way. So the last source of money to buy a home is from down payment assistance programs that are provided by local and state housing authorities. Depending on where you're buying, these programs can vary. Some fund the assistance from offering a higher rate than the going rate is outlined above, while others use tax money to fund the assistance. Most of these programs have catches such as income limits, home buyer education requirements, as well as minimum credit requirements, which can actually be more restrictive than other loan programs without down payment assistance. So anyway, but as the other source of funds, it doesn't hurt to check them out. So enough of me droning on. If you have immediate concerns, please feel free to reach out to me directly, and I'll be happy to answer any questions that you might have. As always, thank you for watching the videos, and if you would, please consider liking, sharing, and subscribing to the channel. It really helps. Again, thanks a lot for your time, and if you have any questions, feel free to reach out to me. Bye-bye.